right, let's begin. So, hi all, and welcome to this webinar on the 6 mistakes lenders make with their KFS and loan agreements. Here is our agenda for today. I'll start with a brief recap and context on why we're doing this topic. Then we'll dive into each of the 6 mistakes, why they happen, how they happen, and how to fix them. And then after that, Shubhesh will show you a live demo of a compliant KFS and loan agreement flow. And then finally, an open Q&A. Before that, a few house rules. If you have any questions before the open Q&A, do ask them in the Q&A box below, not in the chat, in the Q&A box. And two, we will be sharing a recording of this webinar by Monday, end of day, on the email with which you registered for the webinar. So with that out of the way, let's begin. I'm Aditya, Head of Marketing at Leegality, and today I'm joined by Shubhesh, who leads product marketing efforts at Leegality. First, a brief word from our sponsors, which is, of course, us, Leegality. We run a suite of products which helps companies go paperless across agreement forms and consent flows. We work with many leading Indian lenders, working with them to build paperless flows at a very large scale across India for a variety of use cases. At the end of the webinar, we'll tell you how you can get in touch with us. So, but before that, let's start with a brief recap and context. So we did an analysis of RBI fines and penal action over the last couple of years. We found that about 5 of these fines could have been prevented had the KFS and agreement process or the documentation process been done properly. I'm not going to read each line here, but looking at it briefly, you can see these fines are ultimately all about a lapse in communication and disclosure. And this communication and disclosure has to happen at the document level, right? So let's dive into, I think these 5 fines come as a result of 6 core key mistakes that we see, right? First and most basic mistake, of course, is incorrect or missing details in the KFS. So one of the fines we covered in the previous slide was about how the lender failed to disclose co-lending arrangements, right? And now if you look at on screen, KFS specifically has a field on this. So if KFS was properly filled, this would have been avoided. Similarly, another fine was about not disclosing proper interest and penal charges. Again, the KFS explicitly has fields on this. So if this were thought about and filled properly, then the fine would have been avoided. So that's the mistake, right? KFS has the fields. There's no set system or process to ensure that they are filled. As a result, there are lapses. How do you build an operational fix for it, right? How do you ensure that at the system level, this does not happen? For this, you need to ensure that the filling of the KFS happens on set rules that are set in your system and not as per the discretion of a branch officer, right? You need to take away that discretion and have a system driving the filling of the KFS. So one way to do this is to create and fill the KFS in your LOS system and then pass it as a PDF to your document execution platform, which then sends it to your customer for signing. Another way is to keep your details on your LOS, pass those details to a preset template in your document execution system, and then send it for signing, right? Both of the flows I've showed you will happen completely automatically. It's two systems talking to each other. There's no discretion involved. But in some cases, there is some manual step. Let's say there are some fields which can only be got from the customer at the point at which they're interacting with the branch officer. You can, in this digital system, which is largely automatic, you can add safeguards like reviewers reviewing it to ensure all details are filled, right? Before we move on to the next slide, so there's two things. One is an automated system to fill up the document based on set rules as far as possible. For any manual spill, add checks and balances in between, right? Have both these layers. So that's the first mistake. The second mistake that we see with KFS especially is the use of a clickwrap for KFS acknowledgement. So the RBI in its KFS rules has made borrower acknowledgement mandatory before execution of the borrower acknowledgement of KFS mandatory before execution of the loan agreement. And for any changes in KFS, it is also made explicit consent mandatory, right? So ultimately, to comply with this in spirit, for the RBI satisfaction, you need both this acknowledgement and consent to be auditable and verifiable so that RBI is satisfied you're doing it properly. What many lenders do though for KFS is they do a simple click wrap, an I agree button or a yes button, right? And this is super convenient from a technical standpoint. But later, when the borrower is asked about it, whether they actually acknowledge the KFS, they can easily deny it because there is no way to tie this click wrap to the borrower. So for a KFS acknowledgement to be secure, what you need to do, and this is the fix, is ensure that whatever execution or acknowledgement method you use is verifiable with an audit trail, right? Now, when we say this often, people push back saying, you just want us to use an Aadhaar e-sign and pay more for it. That's not what we mean, right? Even we agree, Aadhaar e-sign is probably overkill for a KFS. But there are multiple options in between, right? On one screen is one such option, and Shubhash will show it in the demo later. A quick sign, right? This sign does not involve an OTP. So it's as smooth as a click wrap, except it generates a digital sign impression on the document. So your KFS will actually have a proof of the acknowledgement. And it also has a timestamped audit trail accompanying it, right? So that's how to fix the second mistake. Have something that appears on the KFS and have something with an audit trail. That's 2 out of 6 mistakes. Now on to mistake number 3, not complying with RBI's vernacular rules. So over the past few years, RBI has issued a lot of definitive regulation on multiple loan segments, right? And in all of these, if you see all of RBI's regulations, there has been one consistent thing. RBI has been insisting constantly on the use of vernacular language in both documents and communication. Now, historically, a lot of lenders have tried to comply with vernacular with something like this, right? It's a formality, it's a vernacular declaration, few lines saying, hey, I understand this, as if this is some magic spell. But the rules and the words are actually quite clear, right? They say all communication. They say KFS shall be written, all communications, terms and conditions, all communications. They do not mean a few lines vernacular declaration. They literally mean everything needs to be in vernacular. So a vernacular declaration clearly violates what the RBI wants, right? One, it is in English. So if someone doesn't understand English, you're making them sign to it saying, I understand English. They're just signing to it because it's a formality, not because they actually understood. And two, it's just a few lines, right? The RBI wants all communications and documents to be in vernacular. This won't work. So what this means is twofold. One is all communication touchpoints at the branch outside the document flow, like notices, signs, brochures need to be in vernacular. But it also means that in the document flow as well, right? All communication within the document as well. The document, can we go into the next slide, please? So the document, everything surrounding the document, the website, the buttons, the consent, the e-sign instructions, every aspect of the flow needs to also be in a vernacular touch point, right? Because the core aim is for the borrower to understand fully what is happening. And the document is probably the most important part of the leg that they really need to understand. So don't treat it as a compliance check or a checkbox compliance requirement. Treat it meaningfully. But the question, of course, is how do you actually ensure this? All right. So now we'll tell you how to systematically and technically ensure that your document interfaces are always in vernacular. So it's slightly technical. Just bear with me for a minute. Right. So the first step, which is on the top left, on the back end, is you need to ensure you have your KFS and your documentation in all the vernacular languages you want to support, right? So have those templates ready. Store them either in your LOS or your document execution platform. That's one. Two, in your document execution platform, this is an example we've used. If you can also use your LOS for this, there needs to be a workflow created for each vernacular language, and the document template must be tied to that specific workflow, right? So that's on the back end. Documents in vernacular, a workflow that runs the execution tied to that document in vernacular with an interface in vernacular for each workflow, right? Now, this backend workflow must then be tied to a front-end selector, right? Language selection interface, either on your customer app, which is bottom right, or on your branch app, right? So that the customer can select before the flow happens what language they want to use. This is very familiar to an ATM flow where in ATMs, they ensure vernacularization by giving the customer an upfront choice. That's the way you do it here as well. Now, once the customer selects, say, a language, what happens is from the back end, that workflow gets triggered and shown on the front end. And the customer then has a vernacular interface because that specific vernacular workflow is triggered. And the document, right, is also in vernacular in that workflow. It's the mapping we did in the backend, right? So that this is essentially from both backend and front end how you orchestrate a vernacular document flow, both interface and document. So that's the third mistake and how to solve it. Time to cover the fourth mistake, which is not doing compliant e-stamping. So most stamping in India right now, contrary to the name e-stamping, most e-stamping itself is phygital, right? That is, the stamp papers are procured physically and then digitized. Even in states with e-stamps, it's like this. The e-stamp is actually printed out, right? It's generated digitally, but printed out. If you go to a stamp vendor, they will do the same. It's not direct. Now, what happens here is one big discrepancy is that the stamp paper, so under law, the stamp paper must be defaced before it is used. And if it is used digitally, it must be defaced before it is digitized. What often happens is people get the stamp paper, upload it, and then add a legend. The defacement happens via a legend. They add the legend to the digital copy. Now, this is an issue because you can technically then, right, in this one, in this picture on screen, the digital one has a legend, the physical one is empty. So you can use the digital one for one purpose and you still have that empty stamp paper, which there's nothing stopping you from actually using it for something else because of this discrepancy. So for stamping, what you need to do, and which is a fraud, right? And it's systematic fraud. Like at the branch level, you have no control what they use the blank stamp paper for. So for stamping, what you need to do is you need to ensure that the physical copy and its digital version are identical. Can we go back to the previous slide? With the defacement happening before digitization, right? So if you see the compliant version, they are both identical versions. You cannot have a discrepancy because it violates the law and opens up to abuse. Now, how you fix it is very simple. We have prepared a list, a checklist of sorts of 5 requirements under stamping law that your digital stamping process must follow. Now, you may have an existing e-stamping process. You can audit your existing stamping process via this checklist. Or if you're evaluating an e-stamp service, you can audit any potential service that you're doing with this checklist, right? This is the legal checklist for India. And if you're interested, we at Leegality can also facilitate this for you. We've used that checklist to build our own system, Bharat Stamp, which is India's largest private digital stamping network that works across 31 states and union territories. Stamps, e-stamps, revenue stamps, as well as NESL stamping. And we're also in this webinar incredibly excited to announce that next month we will be launching a completely instant paperless e-stamp in partnership with SHCIL. Here you can get digital stamps on the fly without actually maintaining any physical inventory whatsoever. So this is launching next month. We will give you details on email. Now on to mistake number 5, right? We have 2 more mistakes to cover. Not verifying signer identity before e-sign. And just a reminder, if you have any questions about what I'm saying, we will have an open Q&A in about 15 minutes, but you can also drop your questions in the Q&A box and we will take them up. So now on to the 5th mistake, not verifying signer identity before the e-sign happens, right? So there are multiple types of e-sign fraud that can occur, right? One is when the borrower uses wrong Aadhaar. 2 is when someone impersonates the borrower. 3 is when the agent collects the sign in the wrong way. Now you will say that, okay, one check is your agent, that if they're doing it at the branch, the agent is a check on this. But systematically, what you need for fraud prevention is you want a way to prevent your branch agent themselves from being a source of fraud, right? You want them to not, you don't want to be reliant on them to be a check on fraud. You want the system itself to be a check on fraud. So the first step to fix this is, in cases of Aadhaar e-sign, is having your system block when there is a mismatch between the Aadhaar used to e-sign and the actual signer. We will show how this works in the demo. And in this system, you should also ensure that any genuine name mismatches are passed because people often have differences, slight differences in Aadhaar compared to what name they give, right? Like the middle name in Aadhaar may be there, like the initial may be there, but what they've given you doesn't have the middle name. It's very common in India. the system needs to not reject these cases as fraud. So it needs to balance both, right? Apart from this, ensure you have a bouquet of options, like for example, face match. If you want to match it, this is again optional, but just ensure you have this option for cases where you need it, or a geofencing, where say you need a specific location for signing, like you want it to happen at the branch, or you want to prove, let's say in gold loans, for example, RBI now wants you to show that the borrower was there at the time of valuation in the branch. So you may need to prove location where an event happened. So you need something like geofencing there. So that's the fifth mistake. And now on to the sixth and final mistake. And one confession here, this is not actually a document or KFS level mistake. We put it here because we know about it. We've been doing a lot of work on it and we are building for it. And it's still important because it fits into the same journey, right? After the document is done or before the document is done. So under both the DPDP Act and RBI's digital lending rules, all lenders must now collect explicit, granular, and specific consent at the time of data collection, which usually happens at the time of documentation as well. What we've seen many lenders do, so in the status quo, actually a bit of context before that. In the status quo, what happens is data collection is done indiscriminately, right? With lenders relying on this data to run their core business models. Under the DPDP Act and RBI's rules, this free and unfettered access to data is coming to an end, right? You need to now, for each purpose for which you're using the data, need to collect a specific consent. You cannot just like indiscriminately collect data. You need consent for each purpose. What we've seen many do is they simply put a basic tick box and just edit the language to say DPDP Act on it somewhere. This is great operationally, so smooth, but unfortunately, it's not compliant at all with the DPDP Act. What you need to do under the DPDP Act is ensure that your consent collection notice, which happens at the time of data collection, has 5 elements. One, purpose-based consent. Each purpose for which you're going to use data needs to be a separate line item in the notice. Two, the data categories under each purpose need to be itemized and mentioned specifically under each purpose. Three, there needs to be a message that tells them how to like withdraw their consent or raise a grievance later, which is there below the box there at the bottom of the box. Four, you need an ability for them to select language because the DPDP Act again requires vernacular. It needs things to be in 22 Indian languages under Schedule 8 of the Constitution. And a fifth one, which is missing on the slide, but is a fifth requirement. If you see the bottom right of the notice is a download button. You need the customer to be able to download the notice for their own reference and perusal, right? So you need these 5 elements in your notice. A simple updating of language to just mention DPDP Act may be easy for you, but it's blatantly a violation, right? We at Leegality specifically, as I said, the reason we're including this specific mistake, even though it's not strictly related to the document, is because we have just launched a product purpose built for consent and DPDP compliance, consent in. You can scan this QR code or you can visit our website consent.in. Very simple. Consent.in if you're interested and you're evaluating things from a DPDP perspective as well. So yeah, with that out of the way, we're done with the 6 mistakes. Here's a recap of them. This is an easy checklist that you can use. What mistakes we've covered, as well as how to fix, right? Everything I've covered in this webinar. Again, we will be sharing this deck with you along with the recording by Monday, end of day. So don't worry, you will get a copy of this. But the idea is that everything in this webinar, you can just look at this slide for the key actionables and takeaways. With that, I'll hand it over to Shubhesh. Shubhesh will show you a KFS and loan agreement demo via Leegality. And after that, we'll do open question and answers. Thanks, Shubhesh. Go over to you.
Thanks a lot, Aditya. Okay. Hi everyone. So what I have today, and this is not part of the product what I'm sharing on my screen right now. I've quickly built a basic agent app which a gold loan lender, for example, would use. I will show you how in this firstly how Leegality integrates very easily either with your branch or agent apps, or even with your website or apps which the borrowers directly would be using. Uh, and this is just like a replica of that. This is not the actual product. That when the actual signing journey our product comes, I'll tell you. So first I'll show you that building the language interface, right? The ATM like interface for language that we Aditya spoke about earlier. You have to capture that language right at the start, because again, this all counts as the interface for them as well. You just enter their name, email address, their mobile number. All of this you'll use to execute the agreement, or rather create the loan application. So you would have this already during the application stage. You'll do the KYC. Then once that is done, you'll send them for valuation, which is a requirement for gold loan valuators. So first, the valuator is going to do that eSign, and in this journey I'm going to show you the fraud prevention features which we had spoken about. Let's say this is the valuation certificate. You can attach photos of the gold items if you want, and you can attach photo of the customer with the gold as well in this agreement. And if you'll see, the buttons are in Hindi because I had selected Hindi earlier, and even my valuation certificate is in Hindi. So I'll just have to do OTP verification as the agent. First, it's done that GPS capture. This is to ensure that the agent, or rather the valuator, is present at the branch during this valuation. Now next, they're gonna give their e-sign consent, and they'll proceed to do the e-sign. They'll have to enter their Aadhaar details. They'll send OTP to their registered mobile number. So I'm just waiting for the OTP. Also, by the way, right now you just see Protean, but with Leegality, you can also put your own brand logo and colors on this Aadhaar e-sign screen. So it's up to you how you want to build it. Okay, OTP doesn't seem to be working, so I'll do one thing. I'll just resend the OTP once. Got it. Sometimes Aadhaar ESPs, they take some time to send the OTP. So in this cases, what you can do is you can just refresh the e-sign link, and it will take you to a different ESP vendor. Let's say this time we came to Protein. Next time it will take you to CDSL, for example. Great. So my document as the valuator has been signed. Now next we're gonna do a KFS flow. So if you'll remember earlier, the borrower had selected Hindi as their language, and the valuation certificate in fact was also in Hindi. These things you will also see are in Hindi so that the borrower understands. And now I'm gonna e-sign this using an OTP list quick sign that we had spoken about. So this is my KFS. It's entirely in Hindi. My interface is in Hindi. I'll click on Aage Badhe. Let's say this is the impression I want to put on the KFS. I'll click on Aage Badhe. I'll give my e-sign consent, and it's done. Like, it's that easy. If you would have noticed, it just took me 2 to 3 clicks, and this KFS was acknowledged. Once they do that, you can just proceed, and you can send them the loan agreement as well. Or you can also directly send them from the KFS without the clicks that I did to loan agreement if you so choose to. So this is the e-stamp. It will have stamp serial number, which would be a unique identifier for this particular stamp, and it would also have a unique ID for this document. And whenever you want to, let's say, map that, which stamp was used for which loan, so you can use this unique identifier number and this stamp serial number, because and they'll be available on each page of the document. So you'll be very easily map, okay, this stamp belongs to this loan agreement. This is my loan agreement. Again, if you'll notice, it's entirely in Hindi. I'll click on Aage Badhe. I'll just wait for OTP verification. You can also, by the way, remove this OTP verification. I've just kept it for the sake of the demo. But if you want to, you can actually remove it also. This is again going to capture my location as the borrower where I'm signing this loan agreement from. Then it's going to do So what I did was a face capture, and if you would have noticed, it gave me certain instructions, right? It said "aage bade," because my face was too far away from the camera. It was not able to judge whether there's a real person sitting there or not. And for this demo, I had already put my photo from the backend in the workflow, so it matched my face to that photo, and it is only then allowing me to do the C sign. So by capturing the face, I just did two tests. I'll click on Aage Badhe. Now I can choose whichever type of Aadhaar e-sign I want for this particular loan agreement. I can uh, do it via OTP. I can do it via biometric. I can do it via iris scan. I can also do it via my face scan. Face scan, it says there's an error because it works on Android and I'm using a Mac system. But if you're using an Android device, it's going to work. So I'll just do OTP based e-sign. I'll give my e-sign consent and again click on Aage Badhe, or rather दस्तावेज साइन करें in this case. Okay, it seems like ESP is taking some time. Okay, this Aadhaar e-sign is going to work very similar to how previous one worked. What I've done right now is just refreshed the document. I'll do the security again. Great, so it's working. I'll just enter my Aadhaar number again. And enter the OTP. And that's done. So within literally 5 minutes, I e-signed three documents. One was the valuation certificate, second one was a KFS, and third one was a Aadhaar e-sign, Aadhaar loan agreement. I'll show you how each looks. So for the entire process, if you would have seen, I've gotten WhatsApp messages and WhatsApp status. This is my loan agreement. It's just loading. Yeah. So yeah, I've gotten the fully signed loan agreement on my WhatsApp. You can also send it to SMS or email via Leegality if you want. And if you will see the borrower's e-sign, which we did via Aadhaar e-sign, that's here. And this e-sign of the lender, this got automatically affixed via DocSigner. And this will be available to you on every page of this agreement. Although in a digital agreement, it doesn't matter, but still, like, you can choose where you want the impression to come. So in this, we have put it on each page. And for this, you'll also get a audit trail. For KFS also, you'll get a very similar audit trail. This audit trail will have stamp details. It will have the stamp serial number. It will have the amount that you had given and the state where it was in. It will also have a document ID, which is the unique ID for this particular document. It will have details of the sender and as well as the signer and the security verification you did for them, like the face capture, their GPS location, plus certificates of their Aadhaar e-sign certificate, plus the consent they had provided for this e-sign captured in a language that they had selected. So if you'll see, this consent is in Hindi because we had chosen Hindi as the language at the start of the journey. So this is the first part, just the journey of KFS plus loan agreement. I added valuation certificate because that's again a requirement for gold lenders. Uh, Next, I'm going to show you is the consent. How do you collect consent? So again, this is a dummy flow I've made of digital lenders, and people will be coming to your apps to avail loans, right? Let's say I want to get a personal loan. I'll apply for it. I'll enter my name, email, my mobile number, let's say if Aadhaar, PAN, whatever you want to collect in the application stage, you collect that information. You click on proceed. Sorry, I'll just then once you've collected all the data, you click on collect consent, and then a banner like this should pop open. This is our consent product that Aditya was talking about. This is a live implementation of it. You can select for which purposes you want to, give your data to the lender, or rather your borrowers can decide that. In this, there is this one mandatory, so I'll just select that and accept selected, and I'll just proceed, and they can then continue with the KFS and loan agreement journey similar to how they did previously. So how do you set this up? First thing you'll have to do is you'll have to go to your legality dashboard. I'll just Once you're in your legality dashboard, you create a workflow. Again, workflow is just like, let's say you have a set template for your home loan agreement. You know what features you want to enable, disable. You just configure a workflow in that case, with so that your agent does not have to decide which agreement they want to execute, what settings they have to enable, disable. You just configure it one time, and all they'll have to do is just run. So let's say this is a loan agreement workflow that we're going to create. Now you have two options. Either you can pass a PDF which is fully filled from your LOS LMS, or you can choose a template which you've made on legality. Let's say I'll take a template that I've already configured on legality. Now, if you want, you can use initial stamping, or you can even use legality's Bharat stamping and select in whichever state you want to do stamping. Let's say I want to do in Delhi, 100 rupees Delhi stamping. If you want, you can also do revenue stamping via legality, and you just have to tell how many stamps you want. If let's say you're executing a DPN as part of your loan kit, so you can choose to use that. I'll click on next. This is my loan agreement. In this loan agreement, these are some values which I'm asked to fill. You can add as many variables, as many values you want to capture in this template, like name, mobile. It's up to you basically. Then click on next. You configure invitees. Basically, you decide by what e-sign type borrower should be e-signing. You can choose OTP, biometric, iris, face, and you can also do Aadhaar verification if you want to. And you can enable, disable security features as per your requirements. You can enable GPS capture. You can set geofencing for them. You can capture their photo to do liveliness and face match test. Send on email, SMS, WhatsApp. Once you're satisfied with these settings, just click on next. This is your agreement. You can set these coordinates as well by just clicking on custom coordinates. And once you're satisfied with this workflow, click on save, and that is it. Now all you need to do is click on this run, and you'll have all the settings available to you already pre-configured. Your agent will just have to click, 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 and the document will get executed. To integrate all, simply just download API payload for this and just give it to your tech team. It should be done within a couple of days. This app which I showed you earlier, I literally integrated this within 2 days, so it's quite easy. uh, I just want to show you one more thing before I pass it back to Aditya and queries. So we've also written two playbooks which would be helpful to lenders. One is about KFS, and this we break down what are the requirements of a compliant KFS, 7 requirements that they have, and then how do you comply with each of those requirements. Plus, towards the end, you'll have a fully compliant KFS flow, what can look like if you're disbursing or lending via app, if you're lending via branch, what it can look like, how the tech architecture should work, and what are the responsibilities for different uh, players involved in this particular uh, flow for the KFS, between, I mean, document execution platform, LOS, LMS, and you as a lender. Second playbook we've launched is for gold lenders, and this, in fact, we launched very recently in a event at Kochi, gold loan event at Kochi. In this, we get into what are the new RBI rules for gold loans, and similarly, how do you comply with them, and RBI compliant gold loan rules flows. I mean, so we'll be sending these to you with the thank you email along with this presentation we used and the recording of this webinar. So keep a lookout. Back to you, Aditya, unless you want me to show something else.
Thanks, Shuvesh. Great. So we're now at the open Q&A. There's a small poll as well. If you would like a one-to-one demo of legality, do answer the poll. We'll get in touch with you. And on screen as well, after you vote in the poll, you can also sign up for weekly updates that we send via email and WhatsApp. And yeah, we are on to the open Q&A. What you can do is you can drop your questions in the question and answer box, or you can raise your hand and we'll give you mic access. Either works. Cool. We'll stay on for a few more minutes. There don't seem to be any questions right now. If you do drop them in the Q&A or raise your hand. Cool. Thank you so much for joining. We will end the webinar now. In case you need to reach out to us, you can visit leegality.com and reach out to us. And yeah, or you can reply to the email we send you on Monday, end of day, with the recording. You can just reply back to that email. Some of you have dropped your contacts in the chat to us. We will get in touch with you soon. All right. Thank you so much.